I'll tell you what works. When BlackRock has $20 billion of assets, and then the guy that runs the BlackRock ETF goes to talk with Coinbase, or when Fidelity looks and they're like, well, I think we'll just go and do it ourselves. When a megacorp with trillions of dollars of assets decides that they want better service or they don't trust the exchange, now you have a market dynamic, and that works because there's huge amounts of assets at risk. And there's armies of lawyers and armies of accountants. It's like, you have to go through a Sarbanes-Oxley, risk control audit in order for me to do business with you. And that means we've got a list of 10,000 things.
It started with a silent shift, one most people missed. On January 23, 2025, something changed that could reshape the future of Bitcoin forever. The SEC quietly repealed SAB 121, the accounting rule that for years handcuffed banks from holding Bitcoin. In its place, SAB 122, introduced under the direction of acting SEC Chair Mark Uyeda, but backed by something far more powerful, an executive order from Donald Trump titled Strengthening American Leadership in Digital Financial Technology. This wasn't just regulation. It was a signal, a green light for banks, trust companies, and institutional giants to fully enter the Bitcoin arena. Now, BlackRock, Fidelity, and over 70 SEC-aligned firms aren't just buying Bitcoin, they're lobbying, shaping policy, and preparing to custody your crypto. And Michael Saylor is sounding the alarm, or maybe the trumpet. To him, this isn't a random regulatory win. It's the start of a financial revolution, one where Bitcoin doesn't live on the fringe, it becomes the foundation of modern finance. Let's get more insights from Michael Saylor.
But they're also the ones that are lobbying for the repeal of SAB 121, right? And the repeal of SAB 121 will result in all of the major banks in the United States and then the rest of the world starting to consider becoming crypto custodians and Bitcoin custodians and the like. And so that's going to happen because BlackRock and Fidelity, and other megacorps talk to their senator, talk to their congressperson, talk to the regulators and point out that they want more options, and the banking lobby gets involved, et cetera. And so Bitcoin is going through this seasoning process where really it's encouraging new companies to buy it, and it's encouraging new custodians to custody it. And we should welcome both, right? The more corporations that own it, the better we are. And the more corporations that custody it, the better we are. There's 1,000 interesting business strategies for people that want to launch a business or generate something of value on Bitcoin. And so this is one. This is the first derivative of Bitcoin per share, right? It's the rate of increase in Bitcoin per fully diluted share, right? That's the idea behind the KPI. So if I have $100 and I buy a spot Bitcoin ETF and I pay 25 basis points fee, that means over the course of 4 years, I'll pay $1 roughly in custody fees. And I pretty much got $99 of Bitcoin, right? So there's a slight dilution of my Bitcoin per share after fees in that situation. It's a very simple value proposition. And I'm paying the 20 or 25 basis points for someone else to handle the custody and the compliance, and the like. And by the way, it's not a bad deal. It's a pretty good deal. Some people paid 100 basis points for a custodian before, so 20 basis points or 25 is not bad. What MicroStrategy is doing, though, is we're securitizing Bitcoin. So if we can sell $200 worth of stock backed by $100 worth of Bitcoin, and then we buy back $200 of Bitcoin, we've actually captured $100 Bitcoin premium, if you will. And so what we're doing is we're generating a yield if we're selling a security backed by less than 100% Bitcoin, and then we buy back the Bitcoin, we're arbitraging the difference and capturing that as a benefit to our shareholders. So you can do that a variety of ways. You might do it by selling equity at a premium to net asset value. Another way you could do it is you can sell a convertible bond. If you sell a convertible bond at 40% premium to the equity price, and if the equity was already at a premium to the underlying asset, you get a double boost. So you might very well sell a convertible piece of debt at a 200% premium to the underlying asset. If you do that, if you do a $300 million bond offering at a 200% premium, you're like capturing $200 million of benefit in the arbitrage, right? And then you're holding the debt, and the issue is, do you think that the thing you bought with the debt, the Bitcoin, is going up or going down over 6 years or so? So let's assume you basically issue convertible debt, and then you hold the Bitcoin for 6 years, and you do it. What you're doing is you're offering shares 6 years out, and you're swapping a set of shares at a premium to the underlying asset for the asset. If the asset trades up, you're going to capture another Bitcoin premium or a benefit on the back end, right? The $300 million of Bitcoin you buy doubles and doubles again. So you make $900 million in sort of an investment gain on the back end, and you make $200 million in arbitrage gain on the front end. Yeah, I think people work too hard at this. I mean, it's a very simple idea. You've got $1 trillion asset going to a $100 trillion asset. It's 100x. And so what's the best way to make money? It's basically capitalize a private company with Bitcoin, capitalize a public company with Bitcoin, convert debt to Bitcoin, borrow money and buy Bitcoin. If you're a VC, you can try to find the next 10 Alibabas. That's hard. Or you can just go and invest in 10 private companies that do anything, that are cash cows. How hard is it to find a company growing 0 to 5% that makes money? It's easy. How hard is it to find a private company that's going to grow more than 20% a year for the next decade without consuming capital? Hard, right? Go find one of the cash cows that's private, invest in them, convert their treasury to Bitcoin, overcapitalize them, take them public. The equity becomes a Bitcoin derivative. The volatility is off the charts, right? If half of the enterprise or more is Bitcoin, you get to a 55 vol, then you've set fire to the company, you make a fortune, right? What risk did you take? You took Bitcoin risk. You see, everybody, but here's the thing, right? I mean, this is a big ego thing. Everybody's got a big ego. And the biggest idea and the biggest, most important thing in the 21st century was already invented and discovered by Satoshi. Satoshi created digital capital. Digital capital is worth hundreds of trillions of dollars. $400 trillion by my last estimate. Somebody's already invented a better idea than you think you're smart enough to come up with a better idea than $450 trillion idea? Like, what's the second best idea, right? The point is, there is no second best idea, right? There's an idea. It's called Bitcoin. It's digital capital. Okay, so you've got the best idea, and you're a business person. And if you humble yourself before Satoshi, and you recognize the brilliance of digital capital, and you recognize the fact that this is inevitably going to go from $1 trillion to 10 trillion to 20 trillion to 40 trillion to 80 trillion to 160 trillion. Nothing stops this train, right? Nothing stops this train. Once you recognize that, you're a VC investor. What do? You invest in private companies, put them on the Bitcoin standard, take them public, and they strengthen the Bitcoin system, and then they draft off the Bitcoin network, right? You're a private equity investor. You find big private companies, you invest in them, you recapitalize them with Bitcoin, you take them public. You're an investment banker. What do? You don't negotiate 1,000 complicated mergers between 1,000 different counterparties or how many different pairs, 1,000 companies, and 1,000 options each. So it's 1,000 times 1,000 combinations, and you can solve all of the combinations because you're brilliant. Or you just merge 1,000 companies with Bitcoin. Bitcoin's a universal merger partner. Okay, I got 1,000 zombie companies at the bottom of the Russell 2000. How do you fix them? Recapitalize them on Bitcoin. Bitcoin is the universal merger partner. Okay, but I need to come up with a new idea. No, you don't. Satoshi already came up with the idea, right? Everybody wants to come up with a new idea. Well, I got a company, I got to grow my company. Oh, is your company going to grow faster than 29% a year with no cost, risk-free for the next 21 years? You have a better idea than that, right? Again, you have pride cometh before a fall. A bunch of alpha males running around, and they all look at, yeah, Satoshi was smart, but I got a better thing. Yeah, Bitcoin was good, but I got a better thing. You know, it's like, but you know, how am I going to get rich and famous if I just embrace Bitcoin? By the way, there are ways to get rich and famous by embracing Bitcoin, right? The problem is when you stray from the path of righteousness. You embrace Bitcoin, you become a great Bitcoin custodian, then you trade shitcoins. You embrace Bitcoin, you create a Bitcoin fund, then you start to trade altcoins, right? You embrace Bitcoin, you securitize it, and then you drift off to do the next thing, right? The world's full of people that they found it, and then they thought, well, I've conquered this, now I got to do something else. You know, by the way, I was that guy, right? When I came public, I had a good thing, MicroStrategy, the greatest business intelligence software. We grew for a decade. We conquered the world. I was like, okay, well, I've declared victory. Now I got to invent 10 more things. So I launched 10 more things. I launched alarm.com. I launched angel.com. I launched wisdom.com. I launched alert.com. I launched blah, blah, blah. It's like, none of those work as well. It's like, guess what? Just because you can do one thing doesn't mean you can do the next 10. It's like, you know, Napoleon, he ended up taking over France. Good for him. He was an Italian. He took over France. But then he's like, I think I'll take Italy too. Oops. He took it. He lost it. I think I'll go conquer Egypt. Oops. He took it. He lost it. I think I'll go into Syria. That didn't work so well. I think I'll go take over Spain. Oops. That didn't work. Now I'll go conquer Germany. Oops. Got it. Lost it. I think I'll take Russia. Get to Moscow. Oops. You know? He drops 3 armies along the way, one in Russia, one in Egypt, one in Spain, manages to get, millions of people to follow him. They die, right? It's like, congratulations on that, seriously. Right? It's like the Alexander the Great, Napoleon complex. Everybody thinks that because they came up with one idea that they were put on earth, as God's gift to deliver their brilliance. And there's a point of humility when you realize that maybe your brilliance was to discover somebody else had a good idea and to embrace the idea.
Bitcoin just hit an all-time high of $123,000 this July, and according to Michael Saylor, we're only getting started. He believes Bitcoin isn't just a store of value, it's the future of money. And he's not talking small. Saylor sees this asset exploding into a $100 to $200 trillion market cap, overtaking every other financial asset on Earth. In his words, there is no second best asset. But here's the twist. As institutional giants flood into Bitcoin, from BlackRock to Fidelity, some are asking, is this true adoption or a hostile takeover? The very asset built to free us from centralized power may now be controlled by it. So what do you think? Drop a comment. Are we witnessing Bitcoin's greatest opportunity or its biggest threat? Smash that like button if you believe we're entering a new financial era. Hit subscribe for more explosive insights into Bitcoin's rise. Share this with a friend who still thinks Bitcoin is just internet money, because this isn't just another headline, it's a turning point in history. Thanks for watching, and I'll see you in the next one.